This is Chairman's Briefing, where we keep you in the know on metals and money in just a few minutes. My name is Rachel Lee, and Lahontan Gold is our partner this week. So we're asking again, is this a healthy consolidation before the next leg higher for gold, or a broader shakeout? Well, bullish convictions are being tested as gold chops around $4,000. Ole Hansen at Saxo Bank notes that the last major consolidation after the May record high lasted 4 months before an August breakout triggered a 9-week, 27% advance. A similar duration could imply sideways trade before renewed strength into early 2026. Akash Doshi at State Street Investment Management agrees with this, expecting about 8 weeks of consolidation in a long-term bull market. Ole Hansen argues that once this corrective phase runs its course, the same forces that fueled this year's rally, which is debt, inflation, and diversification demand, are likely to reassert themselves, making the next meaningful leg higher a 2026 story. The World Gold Council just published its Q3 gold demand trend report, and it shows American investors are piling into gold like never before. U.S. gold demand jumped 58% in Q3 compared to the same period last year, driven almost entirely by exchange-traded funds. North American ETFs absorbed $16 billion in the quarter, accounting for 62% of global demand. The World Gold Council also shared updated price forecasts from industry experts. Bloomberg consensus forecasts point to prices rising through the first half of 2026 before easing toward year-end, with full-year 2026 targets ranging from $4,500 to $5,000 per ounce. Canada's federal government announced a $2 billion critical minerals sovereign fund over 5 years to take equity stakes in mining projects. The fund will support equity investments, loan guarantees, and offtake agreements. Ottawa is also adding a dozen minerals to its exploration tax credit list, including tin and tungsten, which have defense, energy, and semiconductor applications. Rachel Sampson at the Institute for Research of Public Policy said equity investments and offtake agreements are significant because China's market power influences commodity prices, leading to low investment in Canadian projects. China accounts for 70% of the market share for 19 of 20 key minerals and 91% of global refining for rare earth elements. The Canadian budget also promises about $370 million over 4 years for upstream and midstream projects, with a focus on getting near-term projects into production. Coeur Mining and New Gold signed the largest gold merger of the year, an all-stock deal valued at $7 billion. The combined entity will create a new senior precious metals producer with 7 operations across North America, targeting 900,000 ounces of gold and 20 million ounces of silver in 2026. This means over 80% of revenue will come from the U.S. and Canada. The combined company is expected to generate about $3 billion in EBITDA and $2 billion in free cash flow in 2026 at lower costs and higher margins. This is a massive jump for Coeur. I mean, just 2 years ago, their full-year EBITDA totaled about $142 million, and free cash flow was negative. Even compared to expected 2025 figures, this transaction accelerates Coeur's repositioning as a larger, lower-cost, and lower-risk company. Record production at IAMGOLD's flagship mine helped push shares higher after the company released Q3 earnings. The miner produced 190,000 ounces in Q3 and 520,000 ounces year-to-date from its 3 operations. Commenting on this news is BMO's Matthew Murphy, who said that IAMGOLD's Q3 was a bit of a mixed bag. Production outpaced forecasts, but elevated cash costs weighed on results. EBITDA may have met expectations, but free cash flow fell slightly short. Murphy observed elevated unit costs at both Côté and Westwood, with full-year figures trending toward the upper end of guidance. He added that while coat costs are projected to decline into 2026, execution remains key. Max Power Mining is making aggressive moves in the emerging natural hydrogen space. The company just more than doubled the length of its Genesis trend to 475 kilometers with a new focus area called Radville. Radville is southeast of Lawson, where Max Power is starting drilling in early November for Canada's first ever multi-well program dedicated to natural hydrogen. Chief geoscientist Steve Halabora said that Radville represents the fourth test of concept focus area. After flirting with $1 earlier this week, the stock has unwound a portion of its rapid gains. Gold Fields just made a major bet on Suriname, investing $50 million into Founders Metals at $4.15 per share. This is a strategic partnership between a top-tier gold producer and the largest explorer in Suriname. The capital is going to fund land consolidation, regional exploration, and working capital at the Equinox Gold project in southeastern Suriname. Colin Paget is CEO of Founders Metals, and he said that combining the company's dominant position in Suriname with Gold Fields' decades of experience developing world-class deposits will position them to rapidly advance the Equinox project. Equinox Gold soared nearly 18% on Thursday after reporting record production for Q3 alongside low costs. The Canadian gold miner produced just over 230,000 ounces in the quarter, which is its highest ever, driven by significant increases in mining rate and mill grade at the Greenstone mine in Ontario. Year-to-date production reached about 634,000 ounces, which means that they're on track to deliver the midpoint of 2025 guidance, which goes up to 915,000 ounces. And that's your briefing in just a few minutes. Don't forget to subscribe before you go. My name is Rachel Lee, and we'll see you next week.